All right, everybody, thanks for joining. Appreciate you attending this sort of a new version of a webinar for us. My name is Rob Macklin. I'm a partner here at Epiphany Law. We're a business law firm located in Appleton, Wisconsin, serving clients in the Fox Valley and internationally as well. We are a pure business commercial law firm in the sense that we focus only on the needs of companies. Unlike a lot of folks in the Fox Valley, we specialize in that as well. We have capabilities ranging from corporate securities to litigation to a patent team, as well as a dedicated labor and employment practice. Genesis of this webinar was just talking with a few of the folks that you see now before you, some really great advisors in a variety of fields. We thought it would be interesting to kind of compare notes on how we actually think about advising clients in a variety of fields, perhaps what the commonalities and the differences are between us as to how we think through selecting advisors, but also helping our clients select advisors, frankly, in other fields as well. So I'll introduce the panelists briefly and then kind of launch into some questions for everybody. There is a chat feature available to you. If you have any questions on the phone, please feel free to utilize the chat feature or the Q&A feature, and we'll get to as many of those questions as we possibly can as we go through this. If there's a question you have that doesn't get answered or you want to contact, just certainly follow back up to the information email link that we had when you registered, and we can answer those questions for you after the fact. So again, thanks for joining us. I'll introduce first at the bottom of my screen at least, Robert Fleming from Aon. Rob's the resident managing director for Greenband Milwaukee for Aon. He's got overall responsibility for operations within Wisconsin. Additionally, he continues to act as an account executive, even though he does lead the operations, which those operations he's led since 2014. And that comes on top of 25 years of risk management consulting experience. He serves clients in all segments, from middle market to multinationals, with an emphasis on manufacturing, professional services, as well as family-owned business. He earned his BA in risk management and insurance from the University of Wisconsin at Madison, and an MBA from the University of Wisconsin as well. So welcome, Robert. Thanks for joining us.
Yeah, thanks, Rob.
Next up is Brooke Koopman, who's a VP of Private Banking at Associated Bank. Brooke is a relationship manager there and is responsible for providing customized banking services to meet the financial business goals for high net worth clients. He provides financial expertise on bank products and engages through collaborative engagement with their consumer, commercial banking, mortgage banking, and private client teams. He looks to attain an in-depth understanding of the client's situations, goals, and family dynamics to provide the best services. And he has almost a decade of experience on this team. He also has a number of licenses. In fact, last count, I lost track trying to count them up, but he is able to provide service needs in financial services, insurance, and a bunch of other areas as well. So thanks for joining us, Brooke.
Thank you very much for having me. Appreciate it.
Fantastic. Next up, Sandy Fries is an audit partner at Wipfli in their Fox Cities office. She is a client relationship executive focusing on getting an understanding of the client's goals and managing the entire Wipfli client service team to assist in those goals. She looks to maintain proactive communication as one of her specialties and ensuring the client's needs are met. She's a trusted business advisor in addition to an audit partner to her clients, and we'll get to that later, and serves as a member of Wipfli's manufacturing distribution leadership team representing all of Northeast Wisconsin. And she is also a member of Wipfli's revenue recognition task force, specializing particularly in manufacturing, distribution, construction industries, as well as a number of employee benefit plans, financial reporting, disclosure obligations, and corporate tax planning compliance. And she has a degree in accounting from the University of Wisconsin. So Sandy, thanks for joining us.
Thanks, Rob.
And last but not least, Bill Casey at Access Investment Advisors. He is the president there and has over 35 years of experience in the areas of financial planning and asset management. Prior to forming Access, Will spent over a decade with the North Star Resource Group, one of the largest privately held financial planning firms in the country. He returned to Wisconsin in 1995, where before that he managed the Phoenix, Arizona office for the firm. And he also spent a couple of years with a NYSE firm in Chicago, establishing their financial planning department, excuse me. He's a certified financial planner and a Section Series 65 Uniform Securities License and is investment advisor representative. He graduated from the University of Wisconsin at Madison with a BA in Business Administration, and he also served as past chair and on the board of the Holy Family Memorial Medical Center and past president of the Big Brothers and Big Sisters of Manitowoc County. So thanks for joining us, Will. All right, so I guess I'm going to throw this first question out to all of the panelists. This is certainly something I get as a lawyer as well, but question broadly speaking, when is the right time for you guys to get into the equation for a client? At what point in their cycle for whatever product or service they're looking at, do you want to be brought in ideally? And when are you usually brought into the decision-making process? So Sandy, why don't we start with you on that question?
Sure. Well, the answer would be as soon as they're starting to think about either a transaction or I'll maybe just use in our situation, let's say a client's wanting to implement a new ERP system. Obviously, as you know, our clients would be well aware that that's a service that Wipfli offers. We would hope that we would be brought in to those conversations early on, whether it's just having that discussion, if it's something we can't help them with, we could, find another service provider. But kind of to your last point, there are times where we're having maybe a mid-year touch point with a client and we find out, I don't know, they did a transaction, they're implementing a new ERP system. So unfortunately, that does happen. But obviously, we would like to be part of those conversations early on, even if we couldn't, for some reason, help them with their current challenge or issue or project need.
What about in a non-project context? How often should a client think about changing their accounting advisors just as a routine maintenance checkup?
I'll say and this would probably be more in the nonprofit sector of the business. Their clients are generally going out for bid every probably three years. I'll say in the manufacturing construction space that I practice in, generally clients aren't going out for bid unless something they wouldn't be happy for some reason. We run into that as well as we're prospecting in those two industries. We find where something really has to be going wrong with their current service provider for them to want to make a change. We do have a few clients where they have us rotate out the engagement partner on the audit side every 5 years, just for a different, I'll say a fresh set of eyes, and that's something their audit committee recommends. We keep the same audit team intact, we're just changing out the engagement partner.
Good. Will, how about same question to you? When should folks think about getting involved with a financial advisor?
Well, usually not after they've made a significant financial decision, which unfortunately happens all the time. And, what do you think about this? Well, I think it's a great idea. I mean, much like Sandy said, I think the earlier the better. When you begin to feel like something's not working, or I'm not getting good advice from some of the advisors that I'm working with, or I anticipate a problem coming up, I think the sooner that you can get after some of these things, the better off you're going to be. Too often, we get people literally on the threshold of retirement walking into our office saying, I plan to retire next year. And we say, I don't know how. We need to take a step back and take a look at this. So much like Sandy said, maybe way before you think you need to have some of these things brought to light, I think you need to begin to establish a relationship. Because that's the other thing. You need to know that you can trust this person's opinion and the recommendations. So I think establishing that relationship before it's critical is important.
Brooke, similar question for you, but if I think about a bank, pretty much every business has a bank right there, unless they're, I don't know, illegally operating in cash or something like that. So the banks are already there, but walk me through the decision-making process that you see clients coming to Associated as to why they might be considering changing their banks or changing the teams within banks. When do they make those decisions, and when should they be making those decisions is probably the more important question.
Great question. I would say in our division, we see a lot of times there's a disruption. Something has to go wrong before someone were to actually make a change. Your point though, banking is a commodity. There's a lot of providers that provide it, and I think what we do and what our team does well is really building that relationship, understanding the client, whether it's personal or business, and understanding really what the goals and objectives are. And then from there, we can help navigate any situation. And primarily, we've seen within the banking sector this year, with the coronavirus, a lot of business owners were eligible for payroll protection program loans, PPP loans. Not every provider participated in them. We did at Associated, so we had a lot of interest in that up front. But we had a lot of clients that maybe didn't have a relationship with us that came to us because their provider could assist them. So we were able to leverage a lot of our expertise in that sector as well too. So it's I would say it's always a great idea to be engaged with any of your advisors that you trust, whether that's banking, insurance, accounting. It doesn't really matter. It's just maintaining that open communication and that relationship to help navigate any challenges that do come up.
And Robert, I'm going to toss a similar question to you, but before you answer the question, I'm going to first ask you kind of explain a lot what it is you do to folks, because I think someone might not be familiar with that risk management component.
Sure. So we work with clients on is really understanding first what their risk profile is, right? Where is the organization exposed to risk? What does it mean to them financially? What does it mean to them? How it may impact their KPIs or what they're trying to achieve short term and long term. And then once we understand that, once we've helped clients quantify it, then how do we deal with it, right? How do we take measures to mitigate that risk? How do we look at ways to pay for things that may happen, which very well may include insurance as well? And then that just becomes an ongoing cycle, an ongoing process. So, to the question of when's the best time to get us engaged, much like everyone else has said, the sooner the better. Because, once an organization's undertaken a certain strategy, they've developed a certain product, they've, decided to make a certain acquisition, both the further down the road you get, the harder it is to unwind or the more expensive it is to unwind. So the sooner we can have those conversations, the better. And we like to believe that, in those early conversations, we're adding value to help the client figure out, okay, is this really something I want to do? Is this something I need to consider? Is there a risk I haven't thought about that I need to worry about down the road? So the sooner the better we can start having those conversations, and even just ongoing. We like to have continuing conversations with our clients to just talk about what is the new risk today that we haven't thought about? What is something that may impact us that we're just not aware of today? So how do we be proactive in helping them, realize many times we'll hear, I don't know what I don't know. So how can we bring those potential solutions or help them highlight potential roadblocks ahead of them ahead of them actually hitting the roadblock.
Fantastic. So certainly a lot of commonalities there, but let's get into maybe some of the specifics of your industry. So Brooke, for you, as you said, banking is a commodity. But how do I think about finding the right bank for me, given the current state of my business or personal financial situation? What are some factors to get that right fit?
Great question. In every institution, I've been with Associated Bank now for a little over 2 years. Previously was with Wells Fargo in the Valley for about 5 years in a similar role. So it's a great question because every institution really has its sweet spot and has its niche, you would want to say, in certain industries. So I would say first off, though, it is a relationship. You need to obviously trust the folks that you're working with, really any business that we're discussing. So first off, again, trust is a key component. Understanding that the institution that you are going to pair with is going to have your best interests in mind as well. So with that said, I would say selfishly, some of the advantages that we've had here at Associated, we've been in the market for about a little over 150 years locally. We have all of our services are local, so that's been a pretty big driving factor to our success here in the local area.
And Will, is a lot of that kind of trust, is that driving your business as well? I mean, when does somebody's looking for a financial advisor, what kind of fit are they looking for?
Well, I think really the first question somebody needs to ask is, what am I looking for in a financial advisor? Some people come to us thinking what they need is investment advice, when in fact it's really more spending advice. That it doesn't matter how great your financial advisor is, you can't possibly keep up with the pace that you're spending money at. So I think identifying what it is that you're looking for, obviously, just like a doctor, if you're going to get shoulder surgery, you might ask around, who have you worked with in the past? Is there somebody that you think is really good? There certainly are ways to check on people in our industry. Unfortunately, unlike attorneys and accountants, which are, once you go to an attorney, you pretty much know what you're going to get, and same thing with an accountant. Our industry is filled with people calling themselves advisors without any real credentials behind them. So I think looking at things like, in our case, a CFP, which would be the Certified Financial Planner, much like a CPA or JD, doesn't make you a great financial planner, but it certainly sets a bar a little bit above somebody who's just hanging out a shingle calling themselves an advisor. And then in our industry, there's a place to check called Broker Check through FINRA, where you can go and see if there are some past issues that this individual has had, and you want to know those up front before you sign on with a relationship. And then, independence is really critical. How independent is this firm or this individual? Unfortunately, working for large institutions, sometimes you're asked to toe the line. Here are the products that we need to get out, or here are the services that we want to provide, as opposed to trying to look at what the client needs and trying to deliver those things for them.
So just curious, are there clients that you turn down because philosophically there's not a fit? Does that happen right now? Sure.
Oh, without question. I think as somebody early on in my career said to me, a client has to have two things. They have to have the ability to pay you and the appreciation for your work. And you're going to run across plenty of people in your career that have one or the other of those, but unless they have both, they will not be a client for very long. So, we're interviewing our clients as much as they're interviewing us to make sure that that fit is real.
Excellent. Yeah. So Sandy, kind of a related idea. Your background is in audit. I know you certainly, and Woodford does a great job there. How do I think about my relationship with an accounting firm that may be conducting some audit, maybe not maybe providing financial advice or providing accounting advice? How do you kind of toe that line? If I need an auditor, if I need a financial accountant, and how my relationship with each? Can you help me understand that dynamic there?
So are you saying more from an independence perspective?
Correct. From an independence perspective, but also how do I establish a relationship with a firm that may be simultaneously auditing but also looking to them for bidding?
Yep, got it. So from that perspective, definitely, and this is really kind of more of I'll say a mindset change that we're seeing with clients is they really want our associates at all levels to have deeper advisory skills, consulting skills. So definitely being able to consult our clients on different accounting issues, even if we're doing an audit for them. They still have to take, I'll say, management override and ownership of and making decisions, but we can still be performing an audit for them or review, which are both the test services. And if they have some, maybe with revenue recognition, which you kind of, when you were doing my bio, that was a new standard for all companies for 2019. And so a lot of our clients look to us to do a consulting engagement around that new standard for them. So we just have to make sure we have the right steps and measures in place where they're taking, I'll say, management override and ownership of those engagements, and we're not making the decisions for them.
But certainly they're looking for that consultative approach.
Yes, they are, and that's really something that we're starting to see more of, as well as when we listen to the CEO of the AICPA, that's going forward, that consultative mindset is going to be very key with all service providers. And that's definitely not something us as CPAs learn going to college for that. So that's something that we've already started to train internally at Whitley because our clients want that from us.
Yeah, and I think that's probably a common thread, certainly between accounting and legal. Most lawyers start at a law firm. You're instructed to analyze the issue and provide the client options. And then as you and you work directly for a company like I did for 17, 18 years, you have a CEO looking at you saying, well, what do I do? Right. And giving them a series of options without advice on what the best is I think, it's a recipe for frustration. And I think it's fantastic what we sort of recognizes that, hey, you got to take the next step and go beyond that.
Mm-hmm.
So Robert, just jumping back to you on the risk management piece, it's I've run that component. I've run the ERM process for a couple of different public companies, and it's probably the most complicated and least understood audit committee function or senior management function. I understand that you guys use some analytics and data really to try to drill down on exactly what we ought to think about when we think about risks, how we think about. So can you talk about utilization of data and analytics in that context?
Yeah, I think that's become critical. I think because what we've seen over the past few years is the availability and the amount of data that's out there that allows an organization to truly understand the risk that they might be facing has only increased. And so when historical ERM efforts may have been much more focused on gut and intuition and surveys and those type of things, but now there's actually data behind it. And so we continually work with clients in gathering that data, comparing benchmarks, showing where other industries, where other peers are exposed from a risk standpoint, and taking that data and really putting forth more of a formal strategy for developing that ERM function. And also what it gives on the back end too is then the ability to really measure the effectiveness of what we've done, to adapt and shift our plan as we move along. And again, not based on gut, but really based on the numbers and really seeing where things are changing and how they're changing. So it's really kind of I don't want to say reshape. That's a poor choice of words, but I think it's made the ERM function much more effective, having it rooted in hard numbers as opposed to, again, gut and intuition. Again, sometimes that was great and you ended up with a good result, but you never weren't 100% certain of was this luck or was this skill that we ended up in the right spot. So yes, so we see it in all aspects of decision making, the continued utilization of data and analytics throughout all of the types of things an organization is contemplating doing.
I guess to the other advisors, have you seen kind of the utilization of data, increase the amount, it change, lessen, increase over the last 10, 12 years?
Well, I'll jump in. The use of data and the misuse of data is one of the greatest problems we have. I'm sure physicians share some of our concerns is that, and I've got some physician clients and good friends who say, Google's now their new doctor, right? And so getting the data is one thing, but interpreting that data in the appropriate fashion is really the critical piece. And that's where I think everybody in this meeting understands that getting your hands on data these days is a very easy thing to do. It's really understanding, interpreting it, putting it in a larger context that's really critical.
Rob, I would just add to that, definitely our consulting side of the business has really seen an increase in different consulting engagements for clients, the data analytics, helping them build dashboards, interpreting those dashboards. So that's become very, I'd say, critical to companies and kind of how they're operating their businesses. And even, we have CEOs, if they want to be on vacation for a week or two, they have an app on their phone that our consultants help develop where they know where the machine downtime and different things like that. So we're definitely seeing an increase in that type of need probably over the last 2 years already.
Are people actually using that data as it comes in, do we think? Or is it just, I need to have data, but I'm going to rely on my gut anyway?
The clients that we've been helping with that, they're really using it, and they're actually, I'll say in manufacturing clients, they're actually pushing that down to people on the shop floor, and they're using that data. So we're definitely seeing just at the, I'll say, management level, but trying to push it down.
Do your clients use it, Rob, or do they still kind of override decisions?
Yeah, I would echo Sandy's comment. I think, the clients that have decided to make an investment in it, that are allocating resources to it, they're using it. They're taking the time to make sure it's right and not get false positives. You will see some clients from time to time who will start down that path, and if they're not really behind it, they abandon that strategy pretty quickly, because to do it right, there is an element of expense to it. There's an element of time, resources needed to it. So for those, again, that aren't that are talking about it and not embracing it, that journey ends, in my experience, pretty quickly.
Brooke, on your end in the private banking world, first maybe you could talk just a little bit about private banking in the context of a business owner and what that means. But are your clients looking to you data, perhaps, to undercut your own products, undercut your own, pitch? Are they expecting you to provide sort of an honest broker?
Certainly, well, and great question. I guess the first step to that is in terms of more or less kind of what my specific role is. It's really assisting our affluent clients, a lot of which are business owners, medical professionals, executives with large businesses. In terms of analytics and reviewing data, I would say it's very much more high level. As everyone knows, interest rates have fallen dramatically here since the start of the year with concerns around the coronavirus. So that's been a very busy part of our business, is not only refinancing existing debt, but new debt. Folks are looking to expand that maybe wouldn't have in the past because its capital is cheap. So outside of that, I can't really think of another scenario where data really drives any additional decision making outside of just standard refinances and capital management.
Nice. Andy, let me kind of jump back to you on the client side. If you're asking, I know you maybe talked a little bit about it, but if you're asking clients, hey, what's really important to them in the partnership that they might have with an accounting firm, beyond this sort of advice that we talked about, are there other common trends on relative partnership and what's important to your clients?
Sure, definitely understanding their industry. That's key. I think clients look to us to continue to bring a fresh perspective and value-added ideas. I'd say focusing more on how can we help them versus just, I'll say, the compliance type work we do for them, whether that's an audit, tax return. They definitely look to us to provide proactive, ongoing communications. Definitely, they don't like surprises, so they really expect year-round service, at a minimum doing quarterly touch points and meetings. Some of the clients I work with, want to meet bi-monthly. We just kind of leave it up to each client. I would say bench strength. They want to make sure that they're seeing the partner, the senior managers that are on their client service team year-round. I think I sort of mentioned this already, but clients are really looking for us to be thought leaders for them, sounding boards, helping them with their strategic plans. I talked about, a little bit about the mindset change, where they're looking for us to be having that consultative mindset. And then maybe just a recent example I'd share is probably that late March or that April timeframe where, the COVID pandemic, we were doing a lot of touch points, sometimes bi-weekly, with our clients around the CARES Act, the PPP loan, just checking in how the pandemic was impacting them and their business. And we just had really good feedback from our clients that they were really appreciative of that. They know we all have a lot of clients to reach out to, but it was really building goodwill with clients and prospects, and just showing them that we care, and that we're there for them if they would need something.
So one of the things you touched on was industry understanding. You guys clearly organize across industry lines. Is that your primary method of organization?
So we try to have everybody once an associate's with us for two to 3 years, we have them pick an industry. So all of our new associates are college grads. We have them kind of working in 3 industries for 2 to 3 years, and then we have them select one to continue on in their career path. So I'm probably a little different because I grew up at a different firm and focused on construction and manufacturing. So when I joined Wipfli, they had just asked if I'd be okay doing the same thing. But otherwise, we really try to have, like, our audit and tax teams are focused on all our different one industry, whether that's manufacturing, construction, nonprofit, et cetera. So I think our clients really value that because I'll just say a manufacturing client probably doesn't want an audit team that, you know, that specifically works on nonprofits. There's a difference. So I think that's a differentiator that we have that our clients really appreciate.
So I guess, Will, on a related note for you, to the extent that you're providing advice for clients, how much time are you able to spend actually understanding their business? If they are a business owner at that point in time, how do I think about the business that they might own or manage in the context of their overall personal wealth strategy? How do you fit, you know, ownership interest that I have in a manufacturing company in Manitowoc into my portfolio, my stock portfolio? How do those things work together?
Well, those are really critical pieces, and many of our clients are closely held businesses, and many of them happen to be family businesses. And so that creates a whole other dynamic, that being that maybe 2 of my children are involved in the business and 2 are not. And how do we treat them fairly when we go to settle my estate? You know, how do we value this? In the ideal situation, if a client comes to us early enough, again, if this is a family transition, we're trying to identify what's the value of this business, how are we going to treat everybody equally. But just as important, we start with, okay, Mr. and Mrs. Client, what is your goal in terms of retirement? Well, we just want to be comfortable, is usually what we hear. Okay, well, let's figure out what that number is. And in many cases, it's a lot lower than the number that they might sell that business to an outside party. So first, we're trying to make sure, is that pile big enough for you to have a successful retirement? And if so, does it need to be bigger than that? Or are you willing to sacrifice some of that net worth to make sure that you don't put your child in a position where they have difficulty going forward? So, I mean, the answer to your question is as much time as is necessary. You know, we don't tell people how to run their businesses, and I certainly don't know how to run many of the businesses with the clients that we work with. But our job is to take a look at what's happening and where are they trying to get to, and what are the things that are preventing them from getting to the path they're trying to be on, which is, again, maybe a transition to that business, a successful retirement, just went through a divorce, just got this inheritance. You know, how do all of these things fit within my financial situation, and what does it mean to me going forward?
That's critical. Hey, Rob, throwing it to you, just a question on some of the risk management and insurance pieces. We haven't really touched on insurance, so I want to make sure we get to that.
Sure.
For business owners or executives that have been paying attention in the last so when policies are coming up for renewal, it seems like our heads are getting spun around with the volatility. What's going on there? Can you talk a little bit about why, and then also what do we do about it?
Sure. So from the why standpoint, you know, there's been an extended period of time where insurers have continued to operate at an underwriting loss. As we're looking forward, they're only expecting those trends to continue. And there's lots of reasons for it. It can be litigation trends, plaintiff's bar, and some of the jury verdicts that are coming out there. It can be, you know, where and how property is being destroyed. You know, and as much as we hear about earthquake and windstorm and wildfire, you know, tornado and convective storm, snow load, they don't make the headlines, but those are causing billions and billions and billions of dollars of loss for the industry. So insurers in general, first of all, have been paying a significant amount more loss than they have been for the premiums they've been collecting. And then on the other side, where, you know, historically they've depended on investment income, you know, they tend to invest a little more conservatively, not heavy in equities. but we all see what's happened with bond rates. And I mean, interest rates are next to zero, so they're not making any investment income. So many insurers have said we have to do something different. They're repricing their models. They're taking less risk in terms of how much capacity they're offering. So it's really causing a lot of volatility and disruption in the insurance pricing model or in the pricing mechanisms. So what does that mean for the clients we're working with? It even becomes more important now to really understand a company's risk profile. How are they assessing risk? How are they managing risk? And really for two reasons. One, how do we help show the insurance marketplace that they're a top tier risk, that it's worth that insurance company, pledging that contingent capital for a reasonable rate. So one, to show how good of a risk they are, and if they're not, where do we need to work to improve it so the market looks at it more favorably. The second is, the stronger a company has their risk profile is, it gives them more flexibility. They may have the ability to say, I'm going to self-insure a bigger portion of risk than I have in the past because I feel pretty good I can control it. I still want that catastrophic balance sheet protection, but I don't have to pay for that layer that I think I can manage more effectively than the market's going to charge for us. So working on that risk profile to, one, help your potential future pricing is critical, and two, to give you flexibility in terms of, okay, I can decide where I want to self-insure, where I want to retain more risk, whatever the case may be. When insurance is cheap, you didn't have to do that. It was like, wait, insurance is going down 5% year on year, all is good, I'll just keep it as is. That's not happening very often these days.
Absolutely. Rick, what about on your side? What challenges have you seen? With it, I saw you nodding over some of the questions about yields on bonds and so forth. What challenges are your clients facing right now in some of these related items?
Yeah, I would say very similar. Interest rates, again, are next to nothing and likely will be the same for the foreseeable future, at least, nobody knows for sure, at least, I would say at least the next 12 months. So we have a lot of large commercial clients that are sitting on significant deposit balances and not really paying it. So we've had to do some more in-depth planning in terms of what are their goals, what are their objectives. If they are comfortable taking some level of risk, what level of risk is that, and really what solutions can we offer to meet that goal. And that's where we do have significant resources to assist with really that long-term plan. And I would say too, from a borrowing perspective, though, it's been phenomenal because, again, interest rates are very low. So we oftentimes have clients that come to us with a need, and their first proposal, they may say, well, I need to, for example, I need to expand my business. Here's the loan I want to take out. Well, that may sound good on the front end, but a lot of times we dive a little bit deeper to find is that the best solution to really fit the goal. So it's, again, just providing that ongoing advice and that ongoing proactive approach that I think really helps out a lot.
And when we think about a proactive approach, I'm sure everybody here has worked with other advisors in a similar field. So talk a little bit about how that team of advisors comes together in your mind, how you put all of these folks together, maybe some advisor kind of categories that we missed on this call. How do they all work together, at a well-functioning company? Sandy, what's your perspective on that?
Sure. We definitely have different opportunities where we're able to work with our client and their different service providers. So maybe just some examples. If a client is doing succession transition planning, they generally like to, have various meetings where it's ourselves, their attorney, potentially their valuation provider if we're not able to do that for them. From a strategic, if they're doing a significant strategic planning, going through a significant process, again, they like to pull us in, their attorney, their banking relationship, even on the insurance side, M&A, very, similar situations, whether it's a buy or a sell, definitely getting us, talking with their attorney, their bank. And even just, I have some clients that I work with, they're not even doing any type of transaction or strategic planning. And we actually meet once a year. It's our client, it's Wipfli, it's their insurance company, the bank, the attorney, and we're all in one room, just really having kind of a good discussion of their business challenges, their needs, and their again, looking at all of us as thought leaders for them. And I think, again, we're starting to see that more and more, where when I was probably growing up in this career many, many years ago, our clients, they're like, don't talk to our bank, don't talk to our attorney. Like, they never wanted to have that overlap, where they're very open to that now and want us kind of all to be on the same page with what's going on in their business.
What percentage of clients do you think are in that bucket of I want everybody together, and what percentage are still in the model?
I would say, I'll just look at the client base that I currently work with. It's probably 30% at least want us to have those communications and connections. I'd say 30 to 40%. There's some that are, because like for myself, I have referral sources with service providers on this call. And, sometimes clients are like, don't talk to my bank. And it's like, I'm not having lunch with your banker just to talk about you. So I think more and more are leaning away from it, but we're definitely, I'd say 30 to 40%. There needs, definitely there's a ways to go, but it's, I think, a good improvement over what I've seen over my career.
Same question to you. Who do you typically see on the advisory side of your clients?
Yeah, we're going to typically run into many of the same individuals around the call here. That can be definitely legal, accounting, investment advisors, banking. All of those will typically be areas we'll interact with. I'd echo Sandy's comments. I mean, those areas have become more and more interrelated as time has gone on, and we work best in those situations where that interrelated structure works within the client, where their legal and their finance and their HR are talking to each other. When the client's operating as a silo, it's much more difficult for us to interact within their team of advisors. But when they're looking at it holistically, it creates more opportunities to have those discussions. And frankly, I think more effective, because again, the actions that we all take with our clients directly or indirectly impact some of the advice and some of the counsel that we're giving our clients from our respective ends.
And I know, certainly from my perspective, having been in-house as a lawyer for a number of years, the coordination seems to be easier when you have companies that have function heads internal to the company that can manage, that are at least responsible for that. When you have a company that's outsource its entire finance function or its entire legal function without oversight, maybe that's where communication seems to break down, in my estimation. Will, how about you? If somebody comes into your shop, what advisors do you expect them to have, and who would you recommend they get that they have on a personal level if they don't have them already?
Well, certainly, pretty much everybody around this panel would need to be involved with most of the clients that we work with, and in many cases, they have those relationships. I would almost kind of flip this around and say, if you end up working with an advisor that either is unwilling to work with other advisors, or says, well, we're kind of a one-stop shop and we can do it all here. We've got our accounting, we've got our legal, we've got our investment people all within the same roof. That's a little scary to me. And that, that whole conflict of interest comes into play. And the idea of checks and balances is really critical. That, if you're working with a firm that has the investment advice, the insurance, the accounting, and the legal all in one spot, who's going to tell you this is a bad idea? I think it's really critical to have these other advisors. I would also say that in my experience, accountants think differently than I do. Lawyers think very differently than I do. My job is typically to say, what about this, or why can't we do this? And I rely on the accountants and the attorneys that we work with to say, well, Will, have you considered this? Or there's some issues here that really go beyond the scope of what you're thinking about that we need to address. So I think having independent advisors not connected with each other is really critical.
Yeah, what I think is interesting, you mentioned the accounting and legal, and I don't mean to pick up Whitfley here because they're really not involved in it this way, but I remember as a baby lawyer way back when, where the next big thing is going to be the big four, it was big six at the time, accounting firms. Internationally, the laws had changed to allow lawyers to work for non-lawyers, right? So typically, I won't go too esoteric here, but typically in the U.S. and the way it was most of the rest of the world, lawyers could partner together, but lawyers couldn't work in partnership with other non-lawyers and share profits. Those laws changed in Europe, and the great expectation, I believe, of almost everyone was there was going to be a dominance of, I don't know, Sadie will probably know that it was probably the big six back then or the big four now of all the accounting firms, basically snapping up all of the legal firms across Europe. Because at the end of the day, lawyers can't really run their own businesses very well, and I'll cop to that. That's probably a truth. But it never happened. Certainly they do play in that space. None of those big law firms went away, and perhaps, speculation is, Will, it's kind of what you said, where having that check and balance is a critical item there.
Absolutely.
Brooke, how about on your end? What holes do you typically see when your clients are working with advisors? What are they missing usually sometimes?
Hey, great question. I think my team and I, we've seen it from all ends of the spectrum, from they need really advice from a legal perspective, from an accounting perspective, from a financial planning perspective. And then I've seen the other end of the spectrum where clients really have embraced that. And in my estimation, that's the clients that embrace utilizing all of their advisors, or at least if they don't have an advisor in a specific field that they have a need in, that they're open to having that conversation, because in the end, that's the client wins. Because I would say, selfishly, I feel I'm a pretty good expert in my field, but I certainly don't know everything in accounting or legal. So, and I think clients are great at running their businesses if they are business owners, but they don't know what they don't know either. So I think embracing the team aspect, or at least having that conversation, the client's going to win in the end. So.
All right, we'll go. We have one more question for everybody, then we'll get some closing thoughts. So this is maybe I saved the uncomfortable question for the end. Rob, I'll give you the uncomfortable question first. When do things go wrong? When is it time to cut a relationship with an advisor? If you're a client, it's the right time to say, it's just not working anymore. How do I know when that's the time?
Yeah, I think there's probably one of two things happens. One, either that, there is a service level deficiency, just not getting the level of service expected, questions about the type and, the service that they are getting, the quality of the service they're getting. So again, is the service not meeting expectations? And then the second would really be just, okay, does that firm have the capabilities that I really need? Am I growing in a way, or am I am I shrinking in a way that organization just doesn't meet my needs anymore, one way or another? So I think, typically those tend to be the two areas where the question marks arise the most. Fortunately, most times if it's a service issue and there's an alignment with the capabilities and or the philosophy of the overall organization, hopefully there's an opportunity to fix it. But again, those are the two times that we typically see where things don't work well, or when things terminate.
Sandy, same question to you. When is it time to part ways?
Yep, I would agree a lot with what Robert just mentioned, where definitely what I touched on before. If a client company no longer feels like they have that partnership with their current service provider, and for all the reasons that I talked about earlier, because definitely when we're in prospect situations, right, that's one of the questions we ask is if they're going out for a proposal, what's important to them in a partnership, because a lot of times when we get an RFP for a proposal, it's because they don't feel like they have a partnership. Like Robert said, there's a service level that their current provider is not meeting. They might be with, I'll say, a smaller firm and feel like they've outgrown that firm, and just really, they're not getting that level of, I'll say, bench strength, where they're getting, touch points during the year from either the partner engagement partners or the managers. They're really just seeing, the younger level associates. So I think it really comes down to really that not having a partnership anymore, or if they're just the current providers not meeting their service level needs.
Brooke, how about you on that topic?
Great question, and I don't want to sound like a broken record, but almost exactly what Rob had said too. I think it's really one of two scenarios where either the relationship's breaking down and it's poor service, or the trajectory of the business or the client themselves is shrinking or really outgrowing the firm that they're with. And, I would say the latter. We've experienced some significant growth that associated where folks started with a smaller institution and just due to their needs or the size of their business and the scale that they're looking to grow, the existing firm just wasn't able to really assist with anything. So, yeah, I would say those two are certainly the most common.
And then Will, how about you? Any you want to take any counter positions there? Or?
Adding cleanup.
Yeah.
No, I agree with everything that everybody said. In our world, the critical aspect is trust. Does this person still understand what I'm trying to do and where I'm trying to get to? And if not, you can sense when that trust relationship starts to break, and then the relationship is doomed at that point. And the second one for us is performance. If the client is expecting a certain level of performance out of markets or out of their portfolio, and we're not delivering, that is certainly a reason for them to question that relationship.
I think kind of there's a thread here about the size. Maybe about you, it's the sort of business equivalent of it's not you, it's me. But it is. I do think it's critical for some folks to keep in mind that just because you're changing advisors it's not a personal reflection on the individual on the other side of the table. And I've actually seen clients come to me several years too late because they did not want to break that personal relationship, and that generally put them into hot water with their advisors perhaps operating outside of their area of expertise, and left to clean up the damage, which is never fun. So we're coming up to the end of the hour, so I just want to give everybody a last chance for comments. So Brooke, how about you? Any last parting words? Any things you want folks to keep in mind?
Well, first off, appreciate, Rob, you and your team putting this together. I think this is a phenomenal way to interact in the new normal we have now. I think this is, again, I look forward to being a part of these calls and assisting with any information I can provide. I would say, again, in closing, don't be afraid to ask questions. There's a lot of volatility and uncertainty right now, especially in the banking financial sector. So I'd love to be a resource for anyone that may have questions, concerns, or even would want to bounce an idea off of. So outside of that, I appreciate the opportunity to join the call.
Rob, how about on your end? Any last thoughts for folks to keep in mind on the insurance or risk management side?
No, I would just say, first of all, again, thank you. Appreciate the opportunity to participate in this. I think, the only thing really on the risk side and the insurance side right now is really just be as far ahead as possible, given the volatility that's there, given what we're seeing out there. It's critical you're looking at this, beyond just 30, 60, 90 days in advance. It's an ongoing thing that needs to be looked at, that as well as just changing risk profile, right? So continually have these conversations and then challenge us as advisors. Again, I think we appreciate that those are the best relationships where, we are getting pushed, we are getting, gently nudged and have an engaged client that wants to improve and pushes us to help them do that. So we definitely try and push as much as we can from our standpoint, but it's always good to get a little pushback from time to time too.
I do agree with that. It is more fun to, I'd rather explain something to a hard question clients ask than just have someone blindly sign off on any document that I draft for them. Sandy, any final thoughts on your end?
Sure. I think, all of us shared a lot of good ideas of, what's a partnership mean with your service providers. So I'd say for all the participants, your different service providers, and do you feel you have a good partnership with all of them? And are they trusted business advisors in your mind? Because that's critical. I think either Will or Rob touched on that. And, that comes down to the trust and the confidence. And, I think for the participants, you've heard us all say, challenge your different service providers during the year. Reach out to them with different, if you're thinking of doing something, get in front of your service provider sooner rather than later so they can help you strategize and plan. And if they can't, they probably know someone who can, instead of trying to do all those things on your own or when it's too late. So that's, I think everybody shared a lot of good ideas of what the participants should be looking for in their different service providers.
Yes. All right, Will, looks like I got you batting cleanup again on the question. Sorry to put.
I completely agree with everybody. Obviously, sooner rather than later, in talking to your advisors. From our perspective, if you haven't looked at your portfolio lately, this is an excellent time to do it. We have grave concerns about where this market's going relative to the underlying economic underpinnings of what's happening right now. And this is a great opportunity to take some risk off the table if you haven't already done so.
Fantastic. Well, thanks everyone, certainly to the panelists and also to the attendees. We'll have a replay available of this for folks to watch after the fact if you need to. And certainly if you have questions for anyone here, you can reach out to them directly, or if you can't make contact with them for some reason, feel free to contact us again. So thank you, everybody. Appreciate the good time. Have a great afternoon.
Thank you, Rob.
Thanks, Rob.